Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Viewing the quality of the technical studies for the Australian dollar is slowly reducing and may potentially be setting up the next bear phase, which the market may not be expecting. The Stochastic is supporting a bearish crossover and now awaits the signal from the MACD. The ADX has also peaked out since the bullish trend, and with the doji that's in place here, the long-legged doji that is, we are seeing some concerns that the market may be finding a bit of a top here. Now looking towards 79.55 as minor and firmer above at 79.95 to 80.20 could see another rejection, with the immediate support coming in at 78.85 as minor and at 78.50, which could be seeing short-term bids building. Today we have the CPI data release, and also along we have the RBA Governor Phil Lowe, who will be speaking on the labour market and monetary policy. It's likely that he will also play down the hawkish minutes last week, as Guy DeBell, who's the Deputy Governor, also did on Friday, which sent the Aussie selling off beneath that, briefly underneath 79 handle. Overall, I still expect to see the market eventually break down. Moving on to Euro, after a brief spell of bullishness overnight, the market clearly rejects from that August 2015 high around 117.15 after printing a high of 12. From the rejection, and also to note, the dollar index did rebound firmly from a 13-month low of 93.46 right in front of the level of 93. Suggests that we could be seeing a short-term spell of bullishness coming through for the US dollar and a spell of weakness for the euro. Now tonight we do have the Federal Reserve to hold its monthly policy decision, with the likelihood that rates will remain unchanged at 1.25%. The market will be focusing more on the rate statement, which will be released after the decision. They'll be looking for seeing if there's any indication from the next rate hike, and also whether Janet Yellen will try and play down to a slightly dovish outlook. Support now comes in at 116.15. Now a break beneath there would give further risk to the downside and look towards 115.30.40 and reassess from there. Now dollar yen, from the long-legged doji, the market come through very firm overnight and now looks towards the resistance of 112.40.50. In light of the current demand and also with the recovery of the US, should see further tests towards its top side and reassess from there. Any pullback though should find support on the day at 111.15. Well, this time around it's the Great British Pound who posts a long-legged doji, and from the rejection overnight of a high of 130.84, now turns the view back towards the downside, with immediate support coming in at 129.65, with the objective still holding to 128.60. Any advances on the day should still struggle towards 130.5 to 131.20. The gold outlook is breaking down after the recent doji and also the retreat from that level of 1,259. Now looks towards a support of 1,244. If the market does find demand from that region, then I expect to see a recovery and look back towards the top side. Now that being said, if we get a break beneath there, would look towards 36 to 38 and reassess from there. The oil outlook came through very bullish overnight as the market surges towards now a target of $48.60. I am a little bit concerned at the fact that the technical implications do not support this move. The longer we remain underneath 48.60 heightens the fact that we will see these gains returned and look back towards $46.60. Now that being said, if we do break above 48.60, then this will bring in a target of $50.20.40 and reassess from there. So that wraps up my daily video. Thank you very much for joining me, and as always, I hope you have a great day ahead, and please look out for the intraday report that will be released shortly.